According to supply managers in the 9 MidAmerica states, how is the economy performing?
Our survey of supply managers in the 9 Mid-American states for the month of May showed an overall index that improved to 43.5 from 35.1. Now, that's still in a range indicating we're in a recession, or the manufacturing sector is in a recession, and the overall regional economy, for that matter, in the weeks and months ahead, will likewise be in a recession. This is very different from the last recession we were in. That's the 2008 2009 recession. In this case, manufacturing is actually lagging the rest of the economy. By that, I mean the recession is principally right now focused on the consumer portion of the economy. The manufacturing sector, not as much, although the manufacturing sector is certainly in a recession. And I'll bring up here, you'll see the profile of the overall leading, what we call leading economic indicator of manufacturing over the last 18 months. But as I said, in this case, it's not leading, it's actually lagging, or at best a coincident economic indicator. And there you'll see in the beautiful Creighton blue there, the rebound in the overall index, 43.5. Of course, the index ranges between 0 and 100, and 43.5 is in a range indicating recession. The overall U.S. number for last month, that's the month of April, was 41.5. And as you see, the overall U.S. number will come out later on this morning, and we'll have to wait to see that next month for our video. But nonetheless, I expect the U.S. number to probably rebound a bit as well. Both indices, both surveys are indicating recession.
What were the hiring trends?
May, the overall index, again, ranging between 0 and 100, the May number was at 40.0. That's up from April's 26.2. Now, April's reading was a record low, so that's at 40. We're still in a range indicating, again, job losses. And those job losses, we're talking about unemployment rates across the region, from North Dakota, Minnesota, Arkansas, and Oklahoma in the South. The average unemployment rate in this area is probably about 14 to 15%, about like what we're seeing in the U.S. Now, we asked the supply managers about working from home, and 62.5%, almost 2/3 of the supply managers indicated they were moving activities to the home from their office, and that we're seeing that even in manufacturing. So that's quite a change from what we saw in previous months.
What impact is inflation having?
Our inflation gauge for May was up a bit, 48.6 from April's 44.0. Now that's up to, again, a reading below growth neutral, and indicating we're seeing, I won't call it deflation. It's certainly price declines, but I don't think they'll be sustained. And the April number is the lowest price index, wholesale price index, we've seen since the Great Recession, and that was May of 2009. But what this does, it reinforces the Federal Reserve's policy. The current policy is very expansionary. They will continue to be expansionary, continue to stimulate the economy, and that's good in the sense of, if we were now seeing an index moving upward above growth neutral, that would be a real concern, indicating the Federal Reserve would have to moderate their current expansionary policy.
What is the impact of coronavirus on the economy thus far?
Coronavirus, it is really hammering, no surprise there, hammering the manufacturing economy, the Mid-America economy. 34% of the supply managers, more than 1/3, indicated they delayed the payment of vendor payments. In other words, normally you see, say, 210 net 30, meaning pay within 30 days. They're extending them out, and that's, again, more than 1/3 are doing that. And that's very unusual. 35.9, or more than 1/3, indicated they had revised or canceled contracts. Very big concern out there among their suppliers. And 30.8% indicated they had actually stockpiled it. They were stockpiling inventories. So that's all these are real concerns, but not surprising. And 28.2% of the supply managers indicated they had moved from from foreign suppliers to domestic suppliers. Of course, that's good for the economy in the sense that we're going to see that show up as positive readings for the economy. And we saw with that, the export numbers were at 15.9. That's export number for May, 15.9. That's a record low, and that's down from April's 19.4. Imports, those were a bit down, 36.0, and that's down from April's 38.8. So all in all, the trade numbers are just looking not good at all, and that's really affecting the manufacturing sector, and that's one of the things that we're going to be looking for.
What does the MidAmerica economy need?
Well, certainly we need to see the trade numbers improve. That would be a very, very big factor, an important factor that we need to keep an eye on. Look at those export numbers, our export numbers, that's manufacturing, also agriculture as well, imports. Keep an eye on that as imports pick up, the economy will be picking up, or I should say the economy will be picking up, and imports will pick up after that. Certainly ahead of that, of course, we need a vaccine for the COVID-19 virus, or the coronavirus. We need to see, in my judgment, a reduction in tariffs. The U.S. has been, at least to some degree, saber rattling again, meaning raising tariffs. This is no time to be raising tariffs. I think an important factor that goes, I won't say unreported, but underreported. We need to see an expiration of the federal support for those workers that are unemployed. In other words, now currently unemployed workers get their, due to the coronavirus, those that lose their jobs because of the coronavirus get their normal unemployment compensation, but another $600 per week. Now that expires after 4 months. I think we need an expiration of that even sooner, but nonetheless, if we're looking out for any signals of the economy turning around, I think one of those is going to be the expiration of that $600 per week payment to unemployed workers as a result of the coronavirus. So those are some factors that the MidAmerica economy certainly needs to rebound and move into positive territory.
What are some areas of risk that we need to monitor?
The most important thing to watch is the expanding, opening up of the economy, and where we see the virus, the coronavirus, spreading and seeing more higher rates of death, higher rates of infection. That would be the chief number one factor to keep an eye on. That would be a very, very bad signal for the MidAmerica economy, for that matter, the U.S. economy. Need to keep an eye on the yield on the 10-year Treasury. That yield is at 0.7%. Now, what we're seeing is the equity markets and the bond markets are telling us different things. The equity markets are up, or at least are not down significantly. In fact, some of the indices, ETFs, and exchange traded funds are above their pre-coronavirus levels. But on the other hand, the 10-year Treasury, the bond market is saying no. There are risks out there, and the risks are very great. And as a result, because of that, investors are seeking safe haven in bonds, driving the price up and the yields down. So when those yields, the 10-year Treasury, keep an eye on that, when it moves above 1%, moving toward 2%, what that tells us is things are getting better, risks are getting lower, investors are getting more comfortable with other areas of the economy, for example, equities and other investment opportunities. Keep an eye on the jobs report, which comes out June the 5th. That'll be for the month of May. Look at employment. We'll still see employment losses for the month of May. Unemployment is likely to remain, will be high, I should say, not likely, it will be high, 15%. And that's above 15%. We haven't seen unemployment like this since the Great Depression. Keep an eye, very important, every Thursday is unemployment, first-time claims for unemployment insurance. If those begin rising in, they're now coming down. Continuing claims, that's those who remain on unemployment insurance, receiving unemployment insurance. That has actually moved down as well, but Need to see that move down, move lower. That'll be a very positive signal. I don't expect that to move down to any significant degree in the weeks and months ahead. Keep an eye on the Creighton's Rural Main Street Survey results, which come out on June the 18th. That's a big signal for agriculture, big signal for rural areas of the nation. Got to keep an eye on that and see what's going on there. It's been the number actually has been below 13. And again, these numbers range between 0 and 100. 13 is obviously closer to 0 and there's 100, indicating pullbacks in the rural Main Street economy, and matching that in manufacturing and agriculture. And here's one I've yet to ever discuss and talk about watching is keep an eye on gold prices. Gold prices now are between 1,750 to 1,800. If those prices move higher, meaning above 1,800 toward $2,000 per ounce, that's two indicators of two factors. That's inflation moving higher, then the price will move higher. It's also an indication of risk. As investors seek safety for their dollars, their investment dollars, they move out of equities, stocks in many cases, moving into gold prices. So that's something to keep an eye on. So those are the indicators that, in my judgment, investors out there, politicians, consumers need to keep an eye on. And that's a summary of our results for the month of May. And until next time to meet again, the first business day of July, may your economic cup runneth over. And thank you.